Good morning. Welcome to The Street on BNN Bloomberg. I'm Matt Scooby. Coming up on the show today, Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth, will be joining us for the hour ahead. Then in 30 minutes, with the FIFA World Cup officially kicking off today, we'll be joined by Adam Van Couverden, former Olympian and Secretary of State for Sport in Canada, to talk about the World Cup and Canada's economic future when it comes to soccer. And in 40 minutes from now, we'll be joined live from the U.S.-Canada Summit to speak with Mike Greenlee, CEO of MDA Space. And we want to hear from you this morning on First Call. You can call us with your questions on North American large caps. We'll have Alan Small answer as many of them as he can at the end of the show. The number to call, 1-855-326-6266. We will open the phone lines in about 30 minutes from now. You can also email us. The address is firstcall@bellmedia.ca. We'll hear some stories that we are tracking for you in the BNN Bloomberg newsroom. Dollarama reporting increased revenue and profit this morning, beating expectations. The Canadian discount retailer's first quarter sales increased by 21%, while profit jumped by 17%. The company continues to see growth. 22 new stores opened in Canada, with another 8 opening in Australia. Well, Transat AT reported weaker than expected second quarter results. Revenue down 0.3% from last year, while adjusted profit also saw a decline. The operator of Air Transat has been impacted by the fuel crisis caused by the war in the Middle East. Transat also says it plans to apply for the new federal funding program to offset the impact of fuel costs. In our top line story, markets are bouncing back after a steep sell-off yesterday, with futures moving higher as traders bet the latest U.S. strikes on Iran are contained. But with volatility still very much elevated, is this rally showing resilience or simply a temporary reaction to easing geopolitical risk? Let's bring in our guest for the hour, Alan Small, Senior Investment Advisor at Alan Small Financial Group, IA Private Wealth. So, Alan, give me your thoughts about where things stand. You know, we have seen this sell-off for this week, the end of last week as well. Is this going to be more prolonged, or do you think it's mostly contained investors a little bit getting a little more confident right now?
Well, I think it's more of the same thing we've seen before. Investors, take to the sidelines a little bit, and then they buy on the dip. And we've seen a lot of these, the chip guys, the chip companies, the semiconductors sell off a little bit over the last few days. And now here we are today, Thursday. They decided to buy in for whatever reason, right? We're hearing that the war in the Middle East actually is ramping up a little bit. Mm-hmm. Whether or not it's contained, I'm not sure. Whether or not this quote-unquote ceasefire is still going on. I've never heard of a ceasefire where both countries are sending out missiles at one another. So a little bit confusing this morning, yet the market seems to be making sense out of it. It looks like investors are ready to buy the dip once again, primarily in technology. We're seeing the NASDAQ up quite a bit this morning. Even the Dow was up, but overall, S&P looks to be higher on the back of investors coming in and buying a lot of these names that are now, once again, down by 10, 15, even 20% from where they were trading just a few weeks ago.
Those names have been driving the market for the last number of weeks, right? We had it was 10 weeks in a row where the markets were up, things were looking very good. They go down for a couple of days, and like you mentioned back in, that back and forth, I know it's pretty standard, at least at different points, but how do you see this now, I think, playing out for the next couple of months as we finish the quarter, we get in through the rest of the summer too as well, because we're starting to watch all the different metrics, right? Whether it's here in Canada or south of the border when it comes to inflation. Very different situations, I understand that, but how do you see this here for the next few months?
Yeah, and a great question. And I think it's going to depend on things such as inflation, right? We keep hearing that oil reserves are getting lower and lower, and at some point, something's going to give. Well, we've been hearing this now for a few months, and yet it has not happened. We keep hearing about inflation creeping higher. We got some inflation data out of the U.S., 4.2% headline number, only 2.9% on a core number. So you can see the big difference between the two. Obviously, core, when you strip out volatile food and energy. So there's a big difference there between headline and core, and that obviously is the higher oil prices. So when does higher oil prices start to seep in to the core readings, to things outside of food and energy? And I think when that happens, that's when you start to see certain things. And it's no wonder that President Trump talked about yesterday how people don't know this, but tankers are getting through the Strait of Hormuz, that the United States escorted so many tankers through, and so many barrels are now getting back out to out to sea and to other countries. And he's saying that that's why the price of oil has hovered in around $85 to $90 versus over $100. So there's a lot of talk back and forth, Iran, United States. Tough to make sense out of it. But I think where everybody seems to settle is on technology. And that doesn't seem to change. It doesn't matter where the price of oil is. It doesn't matter how many barrels are getting out of the Strait of Hormuz. It just seems like everybody is excited about tech and AI and tech spend. And as long as, the big hyperscalers are spending hundreds of billions of dollars, companies or investors are going to be still excited about that space. And like you said, maybe there's 20 companies driving the market over the last, let's say, 2 to 4 weeks, and those names do not change. It just seems like they continue to move higher. And if you're an investor that is in a diversified portfolio, possibly not doing as well as if you are more concentrated in those areas, but you still got to stay invested because every dog has its day. And at some point, these stocks do come back down to earth. We've seen it with Micron. We've seen it with AMD. We've seen it with all these chip makers. And it's going to happen again. And perhaps we do see a bit of a summer swoon or maybe something in September. But I fully expect another 5 to 10% drop at some point. On average, we get a couple a year. We've already had one. I expect fully another one to happen. But it looks like it'll probably be just another buying opportunity for investors to get in.
Got about a minute here, but I want to get your take on where Canada and the Bank of Canada yesterday, the technical recession, the not recession, right? You have what Tiff Macklem is saying yesterday too. The growth is stagnant. I think everyone agrees. Clearly, it's not there. The bank expects it to come back for the second quarter. Where do you land to right now on Canada's economy in particular?
Yeah, for me, whether we're in a recession or not, I think it's just a name, right? The Bank of Canada saying we're not in a recession. The CD Howe Institute, well, we're not in a recession. For me, it doesn't matter. At the end of the day, our growth is anemic. It is basically there is no growth. And we haven't seen really growth in a while. The last 3 out of the 4 quarters that Canada have seen data for, they've been in the red. And so what is our government going to do to spur on more growth? What are we going to do to attract more business to our country? What are we going to do to get more money in the hands of small businesses, in the hands of all of us? Do we need to cut taxes? Do we need to continue to cut interest rates? It doesn't seem like the Bank of Canada is going to do that. But I think something needs to happen. I talked to a lot of individuals, and they say that we need big bang tax reform. But the government doesn't talk about that. And I think we need to do something here to shake up things. We've seen GDP per capita. It's been the lowest out of any G7 nation for quite some time. What is our federal government going to do? I know, the Prime Minister flying around trying to make trade deals, but those deals and the profitability for those deals probably won't happen for another 10 years. What is our government going to do today to help all of us today and to help our economy start to grow again? And that is the question I think everybody should be asking.
Okay. Up next, we're going to have a look at the markets before the bell. Stay with us here on BNN Bloomberg. You're watching The Street this morning. Here are things that are shaping up on the markets. Let's start with U.S. futures. We talked about it, a rebound clearly on the board. How about the NASDAQ futures this morning? Up over 1%, at least for right now. The Dow also higher. Investors, Dal mentioned too, just before the commercial break, getting back into it today. Clearly, it looks like things are going to be a little bit better right across the board, at least for now. Again, the futures before the bell is open. Let's have a look at how the major Asian markets finished the day as well. The Nikkei also up. Again, briefly, got not much to swing here and there as you look across Hang Seng too, down slightly, 0.6% as well. But again, things overall, very little change too. European markets here so far as well. Things, again, in the green, at least for now. But you can see 40 up 1%. The FTSE also up over 1% right now. Not much change in the DAX in Germany, at least for today. But we're going to watch that here closely as they're approaching the end of their trading day. Let's have a look at where the TSX finished the day yesterday. We talked about the amount of red that we have seen over the last number of days, going back to last week too. Down over 260 points, almost 0.8% too. This is a 3-week low that the TSX has closed at too. The Middle East tensions that we touched on too. Investors being a little bit spooked by that. Better today, and also that future rate hike that it does look like might be coming coming, but still, Tiff Macklem was saying with the Bank of Canada still could go either way, whether it could be a cut or a rate hike. So we'll watch that here over the next little bit. Let's have a look at your biggest winners and losers yesterday, too. On the TSX, Constellation up over 5% for the day yesterday. Strathcona Resources also up nearly 5%. Touched on gold, too. Base metals had a rough day that were leading a lot of the declines that we saw in the red, at least for now. To look at gold futures, right? At least for now, down as well. Again, almost 1%. Silver down almost a 1.5% here, at least for right now. And that was also the day yesterday, too. Just, again, we're going to watch this slowly watch this trend, even though, and we'll see what happens when the TSX does open here today. Oil was also up yesterday, at least a little bit too. Western Canadian Select up over 2% to $1.76 a barrel, currently close to that $76 barrel mark. Crude oil too, as well. You look at the international standard as well, down to, at least for right now. So we watched a little bit of a bump yesterday, but clawing back some of that, and we'll keep a close eye to, and especially what's happening in the Middle East and where investors land on that. Well, Oracle shares are dropping this morning despite reporting strong growth in Q4. Capital expenses higher than estimates, raising concerns about the scale of spending needed to power artificial intelligence. Now, this is adding to the question, is the AI trade overstretched? Let's bring Alan Small back in, of Alan Small Financial Group, IA Private Wealth, too. Been touching on it. You know, a lot of the losses that we've been seeing, chalking it up to AI. Too high, too fast, want to pull back on it a little bit. Where do you land on this and what we're seeing from Oracle here so far today?
Yeah, so for me, I actually like Oracle. I think it's a great investment for individual investors to take a look at. Obviously, you have to have that risk appetite to own the shares. But yeah, I think everybody, or at least the biggest negative is the spend, right? And not only do we hear from Oracle, probably the biggest negative for a name like Meta, formerly Facebook, they've been falling in price because of spend as well. They announced that, they're increasing spending. Oracle, we know how much they're building out the infrastructure and how much they're spending. And it's interesting, though, because you look at Oracle and Meta, and all of a sudden, you see individual investors sort of punishing these stocks because of the spend. But then you hear about other companies and how much they're spending, like Alphabet or Google, and they don't seem to have the same punishment, if you will. So I think it's very selective. Perhaps it's because of the different businesses that these companies are in. But overall, where I land on the spend, I think it is necessary. Obviously, there is that thirst for compute, thirst for data center build-outs, thirst for AI, and that doesn't seem to be going away. And if you hear all these CEOs speak, they still say and they still maintain that we're in early innings of a 9-inning ball game. And so if that is the case, then you could probably anticipate more spend down the road. And a name like Oracle or a Meta even, Meta trading at 17 times forward earnings, a name that I like quite a bit, trading well below their 52-week highs. I think these names can be bought on these dips, and I think you will see them bought on the dips because I think they are some of the more, a name like Meta, probably the cheapest name out of the big cap tech names that I think exist today.
You have the build-outs coming. You touched on it, right? Early innings, at least for now. We know that that's happening. We're going to watch these swings a little bit. It feels like it's been, the meteoric rise of these stocks and of these companies in particular. But as you start to factor in everything else, and, is the pullback still going to happen a little bit? And we're going to watch these swings, maybe not as wildly, but it doesn't feel like we can watch this climb continue at the rate that it has here the last couple of months.
And that's a great point, because at some point, the spending, if it doesn't stop, it'll definitely slow down.
Right.
And so that's why I think as an investor, you need to be mindful of that and take your wins when you have them. I'm not saying to get out of these positions altogether, but if you own a chip stock, whether it's an AMD, a Micron, or whatever you want, NVIDIA, I think as stocks move higher, as the price of these shares move higher, you trim some of the profits. You take those profits and you move the profits elsewhere in another name, perhaps outside of tech, or perhaps another tech name like a Meta, for example, or a Microsoft that has not moved higher, or at least not much higher as yet, definitely lagging the rest of their peers. So yes, I think as these stocks move higher, I think you should be taking profit. But again, you got to ask yourself why the recent volatility. Some people are chalking it up to a lot of money coming out of these names to potentially go into a name like SpaceX come tomorrow, right? And that has been the fear. And I've heard some people say, we got to get through tomorrow before this market can go to the next level. And I've heard actually some others say the SpaceX IPO is the top of the market and everything kind of falls back after that. So Not sure how it's going to go. I don't think it's going to be the top of the market. That's my opinion. But there could be some profit taking in certain areas to raise some cash for the SpaceX IPO come tomorrow, which I think is going to be a crazy day. Whenever they actually start to trade, the $135 IPO price, definitely, in my opinion, we will not see 135 on the board when it starts to trade. Or if we do, it'll quickly move a lot higher. So there's a lot of reasons, I think, perhaps for some jittery markets, whether it's SpaceX or whether it's, the selling off of some of the profitability. But now today, for whatever reason, we're starting to see buy the dip mentality. I think you're going to see that a lot over the coming months.
And we also, you have SpaceX, because I'm going to touch on that. We only have, limited time now, but it's going to be wild, I think, and very interesting to see what happens tomorrow. But then we get into the rest of, the summer, possibly OpenAI, Anthropic, that the possibility of those IPOs too as well, where we're going to have a lot of supply, it feels like, here in the market. Going to be able to handle it as we get through these next couple of months. Where do you stand on where do you fall on that here for those really big ones that are coming, clearly?
Absolutely. The Anthropics, OpenAI. We don't know OpenAI yet when they're going to go public. Anthropic, it's talked about maybe September. But good question. Where's the money going to come from? Where are investors going to find the cash to invest in these names? And that's why a lot of people think they're going to be taking from other names to put into these names. And if that were to happen, you could see a rotation out of a lot of these big cap tech names or other positions in the stock market. So a great question. I don't think anybody has the answers to that question as yet, but I'm sure with these names as popular and as these companies are talking almost $1 trillion in size, SpaceX, 1.7 trillion they're expecting in size. So there's going to be a lot of money that goes into these companies. Where it's going to come from, I guess that is the $1 million question or $1 trillion question, as we say.
It certainly is going to be, and it's going to be very interesting to see tomorrow. Okay, up next, we're going to be back with Alan Small to see why, we just talked about it, Meta is on his radar among a few others. Stay with us. Time now for On the Radar. We're back with Alan Small of Alan Small Financial Group, IA Private Wealth. So you've touched on it a couple of times and maybe outline it too as well, maybe a little more detail about why Meta is on the radar right now. We're watching that pull back a little bit, and we're watching, a few of the big ones come down.
Yeah, so, in this type of market, you have big cap tech names that are, as we said, are driving this market higher. And there are still a few big names. Some of the former, we used to call them Mag 7 names, Magnificent 7. Some of these names have not done well for whatever reason. And I guess, as we said, a lot of it has to do with the spending. And for whatever reason, Meta is one of those companies that has been in the doghouse for how much money they actually are spending. And you can see the chart, how much it has come down. Once upon a time, just under $800 per share stock, trades in and around $570 today. At least after the close yesterday, well below its highs, trading at 17 times forward earnings. They reported a really strong quarter, record revenues, and yet this stock was punished. So something like that to me does not make sense. I believe in management. I believe in Mark Zuckerberg. All the things they're doing over at Meta, they continue to do business. And keep in mind, how many people are on Meta apps every day? I think it's 1.6 billion people use Meta apps every day around the world. And so for me, it's just a compelling story. And I think a cheap name, big cap tech name that I think is cheap. And I think, again, if for the right risk appetite, it's a name you can take a look at.
And Microsoft kind of, it feels like it falls into that same, not exactly the same, but in that same where one of those stocks that investors are punishing for reasons we don't necessarily know. Well, we do know why, at least for now, but it's been picked out of the bunch as well that they, again, are pushing lower right now.
Yeah, and I think Microsoft, again, slightly different, as you said. I think they're being picked on for their software, right? There's still this fear.
As are many others, right?
Yeah, exactly.
As soon as it's software, it feels like, okay, no.
Exactly. But everybody has to understand that Microsoft, yes, software, but they do so much more. Chips, their Azure, which is their cloud. They're in gaming with their Xbox. They own LinkedIn. They are in all the growth areas that we've seen over the last 5-10 years. They have business in all those areas. And so, a stock that used to trade $555 at the high point, now trading, under $400 a share, I guess, as you see there. A name that also is trading at levels I don't recall seeing, looking at just over 20 times forward earnings. This stock historically traded 30, 35 times earnings. So for me, another name, big cap tech name. They were punished last quarter because Azure growth came in at, I think, 38, 39%. They were expecting 40% growth. So to me, that's just silly. I think a name like Microsoft and how much they are doing, they also own 20% invested in OpenAI. They made an investment in Anthropic. They are into AI. So on one hand, they're being punished because of the AI versus the software theory or battle. And on the other side, they actually own AI with Anthropic and OpenAI investment. So I just think that the market, they kind of shoot first, ask questions later. I think that's what they're doing in Microsoft. At some point, I believe the value of Microsoft will be realized and this stock will go higher.
Let's go to the banking too and financials as well. A lot of talk about JP Morgan always, right, when it comes to south of the border. But Wells Fargo is also on your radar. So take us through why.
Yeah, so when you look at, again, the banks, I'm always looking for cheap names, right? And recently, Wells Fargo has dropped. Their earnings weren't as good as some of the other banks this past quarter, I have to say. And the stock has fallen out of favor. Again, you can see it's come back a little bit recently. The stock was trading almost at $100 a share, got down into the high 70s. Again, another opportunity to buy a good quality bank. I believe something like, I think it's the third largest bank in the United States right now at a discount, trading at 15, 20% on sale from where it used to be trading. And when you're looking for bargains in a market that is trading at all-time highs, and you're looking for other areas to diversify into, not just tech. We talk a lot about tech because it's the largest sector by far of the S&P 500. But when you want to diversify away, you want to look at names in pharma, in banking. And I think Wells Fargo is a name that you could take a look at. If you look at our Canadian banks right now, bit of an opposite reaction. Our banks are at all-time highs, whether it's Royal, TD, Scotia, BMO, CIBC. Take a look at these banks. It's tough to buy them right now, trading at 16 times forward earnings, which to me, historically, is very, very high. Normally, these banks trade in around maybe 11 times, 12 times. At the top end, Wells Fargo is trading at around 11 times forward earnings. So a name that, to me, fits the bill, looks very cheap to me, a great name to own, and I think will continue to migrate higher as time goes time moves forward.
Yeah, certainly interesting too in the position that we find ourselves in today. Okay, we are going to take a quick break, but still ahead, the FIFA World Cup kicks off today. We're going to speak to Canada's Secretary of State in Sports on the country's economic future in soccer, and our phone lines will open shortly for our first call segment. You can call us at 1-855-326-6266. You can also send us an email at firstcall@bellmedia.ca. Dollarama is reporting increased revenue and profit this morning, beating expectations. The Canadian discount retailer's first quarter sales increased by 21%, while profit jumped by 17%. The company continues to see growth. 22 new stores opened in Canada, with another 8 opening in Australia. Transat AT reported weaker than expected second quarter results. Revenue down 0.3% from last year, while adjusted profit also saw a decline. The operator of Air Transat has been impacted by the fuel crisis caused by the war in the Middle East. Transat also says it plans to apply for the new federal funding program to offset the impact of fuel costs. And Oracle shares are down in pre-market trading despite beating revenue and earnings estimates. The software company's revenue was up by 21% in its fourth quarter. It also raised its profit forecast for the year. However, investors seem to be showing concern about the company's plans to raise more money to finance its build-out of data centers for AI. Oracle says it foresees raising an additional $40 billion through debt and equity financing. Let's have a quick check, too. There is green on the futures boards here this morning south of the border. That's, again, a change from what we have seen over almost the past week. A lot of red, but right now, too, you have the NASDAQ up at least around 0.7% in futures trading, over 200 points. Same for the Dow. Looking good to start the trading day. We'll see what happens when the markets do actually open. The 2026 FIFA World Cup kicks off today with the first game touching Canadian soil tomorrow. Canada has invested over $1 billion in the World Cup. and more on the country's future in soccer. Here to talk about that is Adam Van Koeverden, Canada's Secretary of State in Sport. Adam, appreciate you giving us a few minutes here this morning. I know there's a ton of excitement, right? Canada will open the tournament officially against Bosnia and Herzegovina tomorrow at Toronto Stadium, at least for now. But just touch on, if you can, to the investment in soccer in particular coming from the federal government right now, and how vital that is for the country's sport that is the played most right across Canada.
Well, thanks very much for the opportunity. It's nice to see you on BNN. And yes, we've called 2026 the year of sport for a lot of reasons, but FIFA and the Men's World Cup is chief among those reasons. So we've invested in infrastructure, in free opportunities for Canadians to enjoy and engage with the World Cup throughout the next month and a half. But we're also building more sport infrastructure, community sport infrastructure. And we also just recently in the spring economic update announced a generational investment in sport across the board for all sports, $755 million to ensure that more Canadians have access to sport, physical activity, play and recreation from coast to coast to coast, because we know that it builds a stronger nation. And with FIFA in town over the summer, it's a great time to emphasize how fun it is, what a great opportunity for engagement it all is, and how it also grows our economy and builds jobs at the same time.
I guess, a lot of money is being spent at this time. Obviously, FIFA coming to our city. There's a lot of fans. We love our hockey, we love our basketball, we love our baseball. Do you think soccer could have the same, enthusiasm as these other sports at some point? I know we're spending obviously $1 billion. A lot of money's going into soccer right now. Do you think it's where we should be spending the money? Do you think that soccer one day will rival these other sports?
I think it already does. Canada has a great women's professional league in the Northern Super League. TFC fans and soccer fans from coast to coast to coast have been enthusiastic. Canada is one of the most multicultural countries in the world, if not the most. And I've always enjoyed watching Euro Cup and World Cup football in Toronto, having been born in the city. And it's going to be pretty amazing to have it hosted here too, because like I said, it's one of the most multicultural cities in the world. And the city really comes alive during these international sporting opportunities. But the investment is extremely prudent, as was pointed out by the PBO recently. But I'd just like to emphasize that Canada and Canadians deserve to have nice things. That includes world-class infrastructure. That includes world-class events. This will attract more federal, revenues, certainly, but also foreign direct investment. All eyes are on Canada. Toronto and Vancouver both rank first and third among the 16 cities hosting World Cup matches. They were both first and second in volunteer recruitment. Canada's the greatest sport hosting nation in the world. It's fantastic for our economy. It's important for jobs. It's how we build infrastructure. And when we do host the world at events like this, or the Pan Am Games, or the World Championships of Cycling later this summer in Montreal, or the Vancouver 2010 Olympics, it emphasizes what we have to offer and showcases Canada's unique contributions to the world, whether they're business, diplomatic, political, or any other enterprise. So events like this are fundamental. We're a G7 country. Mm-hmm. And like I said, Canadians deserve to have nice things, and free concerts, food festivals, cultural opportunities, are from coast to coast to coast over the next 5-6 weeks. It's going to be a fantastic summer.
There's a lot of excitement, and I don't necessarily want to damper that in particular, too, at least for now. But, you're a former Olympian. You know what happens at Olympic sites when infrastructure gets built, and then, the initial plan is that, hey, we're going to reuse this, we're going to repurpose it, and it's going to be there. And I don't think it's happening for the World Cup. A lot of this money being spent on security, too, clearly, given where we're at geopolitically in the world right now. But you look at, the temporary stands at Toronto Stadium, also BMO Field, that are probably going to be taken down after the World Cup, and we're spending millions of dollars on that. Outside, in some of what's happening, how do we justify some of these costs? In particular, I'm focusing on infrastructure as well, in order to have this and ensure that it then continues, as you say, to get used by the communities, to get used by the public for years to come, and not necessarily left behind.
Well, on BNN, I don't think I need to emphasize the true difference between an investment and a cost. All of these are investments in Canada's future, whether we're talking about doubling the number of elevators for accessibility at BC Place or increasing the number of suites available for viewing at BMO Field. All of those investments will pay off in the long run. But I also think of investments not just in terms of the hard costs and the security, absolutely fundamental to putting on a global event like this. And I'd like to also emphasize that that is an investment in the future, because the capacity to protect Canadians will continue to be stronger as a result of these investments into the future. But when I see the smiles on kids' faces and the inspired families, we worked with Canada Soccer to ensure that 5,000 Canadian families had access to the friendly matches for free. I met with a lot of those families on the side of the pitch or up in the stands. Those kids were so happy and so excited. These are fundamental core memories that these families will carry with them forever, whether it was a game in the freezing cold against Iceland or a really fun match just pitch side the other day in Montreal against Ireland. Those kids are experiencing something so unique. Like I got to go to a World Series game when I was 11 or 12 years old with my dad, because he worked at Shopsies and he got a couple of baseball tickets. I'll never forget that. And last fall, when I got to go to a World Series game, I called my dad, who lives in Winnipeg now, and sitting in the audience, I cried. Because like sports brings us together like nothing else. Mm-hmm. It makes us happy. It brings joy to our lives. It provides us an opportunity to celebrate. And it's a really positive way to celebrate our national identities. And in Canada, the cool thing is if you have Portuguese heritage or Dutch heritage or wherever you're from, you can celebrate that too at the same time as wearing your Canadian jersey proud. So the World Cup is going to be an amazing time. The investments that we're making as a country, whether in the $755 million that we're investing in all sports across Canada over the next 5 years, or the investment that we've made into the FIFA 2026 Men's World Cup, they're all going to pay off for Canadians, and I hope everyone enjoes.
I guess I know you mentioned the athletes, right? I think that's important. We all like to see our top athletes compete. The amount of money that is being spent, I guess, are you also trying to create the environment here to support world-class athletes, and trying to bring more world-class athletes to soccer or to other sports? Because obviously, as a kid growing up, as you mentioned, I used to go to the games and depending on whatever sport, and love to see your favorite athlete out there. The amount of money that is being spent, is that to perhaps build the facilities and what we need, the infrastructure, to attract these world-class athletes?
Well, we want more young kids to have those opportunities. And respectfully, you've characterized this as money spent 5 or 6 times in your questioning. And I'd like to insist that these are finances invested in the future of our country. When you get a kid playing who would otherwise be on their phone or be alone in their room, or maybe not have access or opportunity to create friends, be mentored, learn some physical literacy, develop new skills, confidence, that's an investment in their future. And that creates a stronger country into the future. When we invest with BMO Place to ensure that there's more elevators, to ensure that their stands are accessible for all, that's an investment, not money spent. These are investments that Canada and Canadians rely on for access to sports, whether we're talking about swimming lessons at the local YMCA or to be able to host a world-class convention at BMO Place, BMO Field, BC Place, or any of our world-class infrastructure. And look, Canada is the best and most world-class sport hosting nation in the world. And that means that we need to continue to welcome the world, because all eyes are on Canada. We have an opportunity to showcase who we are, what we have to offer to the global economy. And I'm absolutely certain this is going to pay off, not just for our hospitality sector in terms of our restaurants, hotels, with all the visitors coming to Canada and Canadians out and about, enjoying all the wonderful festivities that from coast to coast to coast, largely which are free. But I know this is going to pay off for many, many years into the future, whether we're talking about, subsidized, lacrosse practice for a kid in Windsor or a world-class sporting event in Vancouver, British Columbia. Sport is fundamental to our plan to build Canada strong.
I may know the answer to it, but give me your sense of what's going to happen tomorrow. Canada, Bosnia, Herzegovina, and then in Toronto before the team moves on to face Qatar and Switzerland as well. How do you think Canada does in this tournament?
I think Canada's in fine form. I've watched quite a few of the games in the last little while. Coach Jesse Marsh has really stepped the game up for our men's side. Love that photo of the Prime Minister enjoying the trophy. He's a huge football fan and is very, very excited to cheer on Team Canada, as I am. And I think we've drawn a competitive group, but also one that creates an opportunity, a pathway for us to go on to the next stage. So could not be more excited to cheer on Team Canada. I think, Jonathan David, Alfonso Davies, the whole side are amazing guys, and I can't wait to cheer them on. So I'll be watching closely tomorrow as they take on Bosnia-Herzegovina, and I won't make any predictions, but I do think Canada. I do think Canada is well positioned to take it to the next level on the men's side. And I just want to acknowledge that the women have won Olympic medals and done so many amazing things in soccer. Christine Sinclair is a legend, and while the men have big boots to fill, I think they're ready for that challenge.
Let's hopefully that they can be healthy enough to have to be good here in the next couple of games. Adam Van Koeverden, Canada's Secretary of State in Sport. Appreciate your time this morning. Thanks so much for this.
Appreciate it. Nice to chat.
Well, still ahead, we are going to head to the U.S.-Canada Summit to speak with MDA Space CEO Mike Greenlee. Stay tuned for that conversation after this. Well, shares of MDA Space are up more than 100% over the past 6 months as the company's earnings growth continues to gain traction among traders and investors. At the same time, Friday's highly anticipated SpaceX IPO is also fueling renewed excitement across the space sector. Our next guest knows a thing or two about that. Want to welcome in Mike Greenlee, CEO of MDA Space, live from the U.S.-Canada Summit. Mike, appreciate you joining us here this morning. It's great to talk. A lot of excitement about space. The Artemis missions aside, we have the SpaceX IPO tomorrow. But for you in particular, at least for right now, where are your biggest cross-border opportunities to shape the future, of the space industry for your company?
Yeah, I think we have cross-border opportunities in all the areas that we work in. We deliver Earth observation data and information, which is important to customers in the United States, including defense. Space communications, though, is a big boom in business these days, with space-based data networks around the world and space-based direct-to-cell networks. The SpaceX of the world get a lot of publicity in terms of what they do with Starlink and the like, but there's a lot of other constellations around the world. They're developing space networks and capability, and our MDA Aurora product, a digital satellites that we build in Montreal here in Canada, have a strong export opportunity around the world. In the area of defense, as defense expands, we have a global defense growing opportunity, but with the United States, there's a strong opportunity to continue our historical collaboration in space, both for civil space and the return to the moon, and in defense, especially as we expand into continental defense and worry about things like Golden Dome and SHIELD and missile detection and prevention here in North America.
Now, you started the year with a $4 billion backlog. Any updates or new wins, that could keep pushing that number higher?
There's been small stuff that's happened along the way, but I think that we'll get into a bit of an order season now as we go through the next couple of quarters. Folks, pursuits and that we've been working on throughout the years so far should mature to the state where we can start to see some orders flowing in that will further expand backlog as we go through the next few quarters.
You touched on it, I think, there too, but give us an update in a little more detail too on the Course Earth observation constellation ahead of the planned launch for it later this year.
Yeah, Course is in a great spot. This is us developing our next generation synthetic aperture radar satellites, two satellites, a C-band satellite, which is a broad area surveillance satellite, and an X-band satellite, which is a narrow zoomed-in view. They're going to follow each other in orbit when we launch them at the end of the year, with our ability to be able to do large scans of the surface of the Earth and then detect things that we want to zoom in on with the following or trailing satellite. This is an exciting evolution in our fourth generation of radar satellites that we've developed over the last several decades, and will tremendously expand our capabilities. We have over 41 customers around the world that have signed letters of intent. I think 9 or 10 of those have already signed their contractual agreements to be able to provide this expanded service from our current RadarSat-2 capability as we move forward into the future.
And what what feedback? Are you getting any yet, too? I know it's early days, at least for now, but, are you getting any feedback from the customers that have signed those agreements so far?
They're just excited and waiting for the capability. A number of people are just getting data and services from us on our RadarSat-2 satellite in anticipation of the Chorus launch at the end of the year.
And when are you expecting, that demand and those agreements, to start flowing, to start turning into some revenue and some earnings?
Yeah, as we go through 2027, we're expecting that to occur. There will be a period of commissioning the new satellite capability that we launched in the end of 26. We'll commission that as we start 2027. Take a few months to get that into service, and then it'll start adding revenues to the geointelligence revenue stream.
So you touched on, too, the return to the moon. You have noted that robotics work, tied to the Artemis program continues despite NASA pausing Gateway-related work, with the potential shift toward the lunar surface missions. How does that affect, timelines for you and opportunities for, you mentioned Canadarm3 and MDA Space?
Yeah, we keep pace with those programs. The Canadarm3 program, which is with the Canadian Space Agency. This is one of Canada's contributions to the Artemis program. And that continues at pace to make sure that as the world works with the United States to live and work on the moon, as we go through the rest of the 2020s, so that we're on the moon before 2030, that Canada can be potentially in a position to help out with all of that program. You mentioned the pause in Gateway. That is true, but the program continues at pace while we look to reconfigure that. In addition, you would have seen announcements recently about what's called commercial LEO destinations or commercial space stations. NASA continues its competitive process for various companies to be able to put up and deliver and operate commercial space stations. We have an equity stake in one of those space stations, but we also have a robotics opportunity in all of those space stations to be able to provide our decades-proven robotics and our new MDA Skymaker product, which is a commercial derivative of Canadarm3, into the low Earth orbit commercial space stations that are going to be developed, again, over the next few years, again, before 2030. So a very busy time here as we go through the next 4 or 5 years.
Yeah, I can imagine, and a lot of opportunity, clearly. MDA Space also recently awarded that contract with the Department of National Defense, right, for ground-based optical space surveillance. How significant is defense? I know you touched on it in your first answer, but give us a sense for the overall growth strategy and where it lands.
Yeah, defense is really important. Like, we see definitely geopolitical shifts in the world. One of the things we talk a lot here today at the Canada-U.S. Summit, as countries stand up a little bit taller and worry about themselves just a little bit more. And so, the U.S. is taking care of itself. Other countries are taking care of itself even more. People are standing up a little bit taller, working on defense, security, economic prosperity, for their nations. As a result of that, the opportunities for sovereignty is the big conversation around the world. And from a space perspective, sovereignty means space-based Earth observation to be able to observe your territory, space-based communication to bring communications to all your citizens. We have a new product called MDA Midnight, which is a space control product that is a spacecraft to protect other satellites. So these things are all driving demand in defense departments globally. Canada is increasing its defense spend. We're a prime contractor for Canadian Department of National Defense. So we have a lot of opportunities at home and a lot of opportunities to export those capabilities to nations around the world that want to increase their defense and sovereignty.
Mike Greenlee, CEO of MDA Space, live from the U.S.-Canada Summit. Appreciate your time this morning, Mike. Thanks so much.
Thank you. Have a great day.
Let's take a look at some of the notable analyst calls and recommendations today. Piper Sandler initiated coverage on Thermo Fisher Scientific with a neutral rating and a price target of $510. The firm cited Thermo Fisher as a defining life science franchise, but noted that a broader market recovery needs fresh growth catalysts to justify a more bullish stance. And Bank of America issued a double upgrade for Intel from underperform to buy and raised its price target to $135. This bullish shift is driven by both growth confidence in Intel's server CPU opportunity. When we come back, Alan Small is going to take your questions on First Call. Stay with us for that. Let's go right to the inbox this morning. An email from Randy. Randy says, good morning. Could I get your opinion on WSP Global? Buy this dip. Our thoughts, Alan?
Yeah, so WSP, a name that definitely not expensive, maybe not as cheap as I would love to see it. Obviously, the stock been taking it on the chin a little bit, trading in at around 16 times forward earnings. In that professional services engineering space, I like the space. I think it's a sector of the market that always in demand. It's a name that I've owned in the past, don't own right now. I think obviously I would say, depending on why you're buying it at this point, if you're buying it strictly on the dip, you may want to look at other names or other areas of the market. I think that represent better growth opportunity. So for me, it's kind of a hold if you own it. If you're buying it for growth, I just think there's better names in other spaces or other sectors of the market that I think that you'll get some more growth in, but definitely not expensive at these levels.
Like what, quickly?
Like tech, like a certain bank, as we talked about earlier on the show. Again, just depends on what you're looking for. Growth areas, I just think there are better growth areas right now in the market.
Okay. Another email, too, from Derek. Derek saying, I'd like to know your take on TD shares. The bank has been increasing at a fairly fast rate lately. We touched on that earlier, too. I'm not sure whether to buy at this point. So, again, we talked about those Canadian banks, too, as well, and where they stand right now. Yeah,
so to me, Canadian banks right now, I know a lot of people might be disappointed in me saying this, is probably a do not touch. It's tough for me to buy TD Bank trading at 16 times forward earnings. Trading at all-time highs. And again, if you go down the list, and you can see the graph there, it's been an unbelievable run since their days where they were trading in the high 70s not that long ago when they had the fraud and all that down in the U.S., TD in the U.S., with respect to what was going on down there, I guess the bit of a hand slap that they received from the government. So things have pretty much doubled since then, and that wasn't that long ago. So to see a TD Bank with Royal, CIBC, Scotia, all trading at all-time highs, tough to buy them at this time. And as I said earlier, I think U.S. banks right now represent better value, at least some of them, than some of the big Canadian banks.
Alan Small, thanks so much for being here today. Appreciate your time.
Thank you.
You've been watching This Street. Thanks for being here. Roger is coming up with the open next. Trading gets underway just over 30 minutes from now.